Weekly. So first and foremost, before New York open, what do? We sweep this low, right? So we have the sell-off into Friday, and then we take this out before New York opens. So what does everyone think is going to happen? They think we're going to keep dumping, right? They're going to want to chase shorts at open. So that's all I was watching on the weekly, just that major swing low being taken. Let's go to the daily. Same thing, just pictured here. Right, I'm going to get rid of it now. You guys remember. And I am going to note this daily breaker at 426275. And we will see why. It's because we have what? This high, a low, a higher high. So it's the lowest down close candle, right? And then 4 hour. Right? You can see the 4 hour SIBI we had if you were in the live stream this morning. Or SIBI low. And again, this is just the process and the routine that helped me. And again, I still do this, and this is actually good that we can do this together because I'm still getting these reps in now too. Right? But this will help you in hindsight. You want to act like you've seen it. And it'll be a good example of that when we go down to the lower time frames and actually mark up the chart, because you're just hammering it into your subconscious. And the more and more you do this, the quicker you're going to see these things live, right? Anything else in the 4 hour that I was watching? So if you guys remember, we had, I think I mentioned it super quick, but we had this 4 hour SIBI. So this candle closed, this is the 10 a.m. candle here. But I expected this to fail because of the equal highs right above and the new week opening gap stuff that we were talking about. Right, so we'll see that once we get down in. But from the 4 hour, this mid-level, when we get down there, it's just the 4 hour CE. That's all we were watching from there. Hourly. I'm not going to mark this. This was a nice inversion. Just note this because I'm going to be focusing more on the long. Actually, I'll note it. Why wouldn't I note it, right? Let's go in depth. But there was some more stuff going on down here before we got to the new week opening gap, which we'll see. But let's note this. Make it orange. H1 CB high. H1 CB low. And then the CE, obviously it'll be between those. I won't mark it because the chart's going to get messy already. Let's go to the 15-minute. So the main thing today was the new week opening gap in London high. So that's this level. This is Friday's close. And this is Sunday's open. So that's the new week opening gap. And they can be very, very useful when they're big gaps like this. And for anyone that missed the stream this morning, I'll explain why, how we use that to 8 hour narrative to the buy side. All right, so see, this is already annoying me, this hourly. I'm gonna get rid of the hourly SIBI, just remember it's there because the new week opening gap serves the same purpose. Okay. This red dotted line, when we get down to the 1 minute, reminder, that's the CE of the new week opening gap. Yeah, I'll be on tomorrow too. Yeah, we're grinding, keeping the momentum going, Panda. Okay. So we also had this sweep. So you guys see in my model that I want to see higher time frame level swept and then another sweep on the lower time frame. So that's exactly what we had here. So this one, this low was the one that purged that weekly, right? But then this one also comes down and gets stopped out. Longs get stopped out one more time before we go higher. And then we displace up, and we'll see what happens beautifully, right? So before I go down to the smaller time frames, I mentioned a ton today, but just to hammer it in, and I should mark London high before we go down. This chart's already getting messy, which I don't really like, but it'll all come together. TMP, what up? So you can see before open, right? We had this delivery through the new week opening gap, right? So was there any buy side offer through here from this gap up? Someone tell me in the comment. Correct. There was no buy side delivered. So this is an inefficient gap, right? So during, I guess from London session, we sell off. Like we said, we reach that weekly sell side, and then we sweep it one more time, displace higher. On top of the stuff from the one setup for life, in terms of buy side targets, we already know that this should be the high that we're targeting because it's the previous session high, right? New York session starts. This is the high of the London session. All these clean highs, right? On top of that, we understand that we've just met a weekly objective, and the new week opening gap needs buy side delivery. It didn't have buy side delivery. It only had sell side here. So it's not efficient yet. So that makes, on top of just being the logic that ICT teaches in one setup for life, that makes this even more high probability. You guys understand that? And again, don't feel embarrassed or anything. If you don't understand something, just I can explain something. But that was the logic for why this was a high probability draw once we had the displacement upwards. We have what? I believe actually on NASDAQ, I think we tapped into this. Let me check real quick. Yeah, this was it. So ES didn't tap into the breaker, but NASDAQ did beautifully, right? Tapped in, immediate rebalance, expansion, right? So we're watching NASDAQ and ES while these things happen. And we'll take a peek at NASDAQ too. Right? But if this did dip down into it, I would have still been watching for support. We have the breaker, low, high, lower, low. And then also this bullish order block right here, right? You can see we have this fair value gap, right? So even just using the 15-minute time frame, as long as you understand we swept major liquidity down here on the sell side, you can frame a trade or a narrative just looking at this with a new week opening gap, London high liquidity, right? This sweep and the displacement. So I don't believe there's anything else in 9:30 open. I should mark that. Oh yeah, and midnight open, because that's part of the routine. On top of the confluences with new week opening gap and London high, midnight opens up here, right? Yeah. Yep. I'll read it out loud what Panda just typed, but IPTA's goal is to provide price efficiently and in a balanced manner. If you see an inefficiency, let's say a bearish fair value gap, for that range, quote, to be balanced, you would need buy side delivery to it or through it, effectively creating a balanced price range. Utilizing new week opening gaps with this concept, you can use it as a constant draw on liquidity like a magnet. So very well put. But today was a great example of how you can use new week opening gap to frame them. I'll keep in mind if we have like very small new week opening gaps, I'll just know where they are, but I won't really be using them in this sense. Like today. Today was a great example. Great way to use it. All right. We also have 8:30 opening price right next to 9:30. So you can also understand that before this move up, we came down below 8:30 and 9:30 opening, swept this low, and then took off and distributed above midnight open. Panda just has the dictionary on deck. Yeah, the bullish breaker here is just low, high, lower low, and then it's the highest up close candle. Steve. All right. So let's go down. He is the dictionary. He's the oracle. Okay, so this would have been an absolute snipe. I did not take this. But displacement, right? Tap into that institutional order flow entry drill. Speed. Yep. Well, I gotta fix something on my Discord. Nice sell. You got some balls long in that. Attaboy. Again, we have this. We're looking for algorithmic signatures, clues to aid a narrative. What I always say, we failed to get to the CE. Indicates what? Price is in a hurry to get somewhere, right? Now, this is actually a reminder. I completely forgot about this, but this will be good for our journal entry. 950 to 1010 macro. Where's 1010? Right here. It's not what I wanted to do. Let's label this. If anyone's not following along, don't feel afraid to speak up. So we have 950 to 1010 macro there. So if we're bullish and we expect buy side delivery to and through the new week opening gap, as well as the London high, we should expect the 950 macro to do what? Someone tell me. I can't remember what this was. This was a 50-minute gap. Let you guys type it out. Yeah, Steve. You guys all got it right, but Steve. It should offer a setup to deliver us to our higher time frame objective, right? So what does the 950 macro do? This is it right here. Is this fair value gap within the 950 macro? Yes. What does it do? It delivers us to the low and the CE. We do retrace, but we don't sell off. We still have to complete these objectives, right? We still have to reach the high. We have to get above midnight opening price. We have to reach, remember this blue line is London high. So good example of time and price, right? I think if I remember correctly, there was a nice example in the 30-second as well. Let's check it out. It might have been on NQ if I remember. Oh, here. Jeez. Right here. Right at 950. Right? We dip right back down into this inefficiency. All right? Time of this candle, 951. Right? 952 here. This is the inception of the move. Okay? Does that make sense how you can use time and price? If you understand order flow, understand the direction where we're likely to draw to, you use these macros, right? If we had already completed our buy side objectives during this 950 macro and our narrative was bearish, I would expect this to offer us a setup to go lower. Yeah, nice panda. Gorgeous. All right, so we could even do like a journal entry just off of this logic. And I don't know why I didn't just use this. This is the one I should have used, sorry. The fact that this box was here screwed me up. I used to, no, I just like keep a notion of it now. And then like my TradeZelle is good too, like so I don't have to pay a ton of money. It's like $50 a month or whatever, but like because now Tradeovate, it shows you the same data for the most part as like TradeZella. Like when it shows you profit percentage for the week, number of trades, winning percentage, money wise, how much money you made or lost. It's the same thing, and I don't have to pay $50 a month for it. Yeah, on Tradeovate, Panda. Yeah, TradeZelle is cool though, but I mean, if I can get the same thing out of Tradeovate, why would I pay for it? Yeah, so let's mark this up because this was pretty hefty move up to the C, this new week opening gap. Obviously, if you just held through this retracement, right, you'd have caught the move up eventually to London high. All right, so we do something like this. Let's see if we can get this low. That would be too crunched. So do something like this. The objective was that we needed, I guess I'll put this on, needed delivery through the new week opening gap, right? Then we could do something along the lines of, since we have yet to reach our buy side objective, we expected the 950 macro to provide a setup for us to go long and complete that objective. Nope. We also had London high as DOL is just drawing liquidity, resting right above the new week opening gap. All right. So we could just, these are good ways you can kind of do your journal entries. Again, we can put our hypothetical, what you could have done if you missed it. Your entries, you can just label it entry, or you can do just like a little blue arrow for buy and a red arrow where you would have sold or covered. So we'll make this blue, right, on their tracement. And then let's just say, just just to keep it organized, we cover at the C. And then we can talk about risk, where we could have put our stop loss. One more thing I want to add too. Little notes like this. Just to help us get in the habit of understanding order flow, what we want to see while we're in a trade. And then I'm going to bring this down here just to give us room to type, because I want to type something up there, which I've already mentioned, but I want to type something like, no, I do. I just, yeah, I could have just done that there, but I just wanted to label it. I do love how they do that. I do want them to make it so, like, if you do the middle line, you click on the rectangle, it doesn't show the value. I'm sure eventually it will, but it still only shows the value of the high and the low. That being said, I type out something like, it was great to see price fail to get to the CE of our fair value gap, indicating it was great to see price fail to get to CE. Once we displaced away from the fair value gap, we can feel confident we are on sides. All right. Let me look. Anything else I want to note? And again, you could, like, obviously we get up there. Let's see if it looks too messy. No, I think it's good actually. Right. Put London high over here. All right. So great example of time and price here, regardless of his journal entry. This was a great example. Oh yeah, last thing I wanted to mention, someone, I forget who it was, there was a 5-minute fair value gap this morning. And someone was like, why wouldn't you want to just wait for us to get here? It was right here. Actually, I don't want to delete all that stuff. Why wouldn't you expect price to deliver down there? Someone tell me why you think it's likely for this to become a breakaway gap. This is just a 5-minute chart. Any idea? In other words, why is this balanced already? That was a hint. Stocks are not. Winner gets 10 brownie points. Yeah, Sully. Boom. Sully got it. So there will be times when we come down into this and tap in and then go, which is still technically classified as a breakaway gap if we just tap into it and leave the majority of it open. But we have what? The same thinking with the new week opening gap. We had aggressive, we had aggressive sell side. Then what do we have? Right after we sweep this low, aggressive buy side, right? So it's been delivered on both directions, all right? So that's why, now using the 5-minute, this is why you look at multiple time frames. using the 5 minute, and where were we here? This is the 1 minute now. You can see we have this little inefficiency here too. You could have entered here, but it is scary, and there will be times when we retrace a little bit and just come into this fair value gap and take off. Or if you want to be safe, right, you can wait to see something like this. You can wait to see if we respect the CE or if we fail to get to the CE and displace, and then you can look for entries. You could have entered here and scalped to here, right? So now let's get how many points were offered. I'm going to move this out of the way just a bit. All right. Now this might look a little messy, but we'll figure it out. So for stop loss, right? Again, it's always preference. So if we were targeting new week opening gap CE as a conservative target, even though that's a good move, but London high could have been terminus. That's 20 points, right? Personally here, yeah, it's, dude, we have the same brain, Panda. I literally was just grabbing this. Tell me this is the one you're talking about. Or are you talking about a different one? Yeah. That's funny. Yep. So we can use this inversion, which I'll label. You could do, again, this is preference. You could do a couple ticks below and allow wicks to get down there. Best case scenario, it does what it did. Or if it comes into the inversion, the CE respects it, right? And last resort, the bodies respect it. You could do a couple wicks below, or you can do a close below the inversion, right? Or if you're trading micros or something, you can open up the stop, but you'd probably have to allow your target to open up a little more too. So it makes sense with the risk to reward, right? But if we dug back below this, maybe it would have just been a purge of this high, and then we would go back lower, right? Because this inversion, the SIBI, it should act as support now, right? Now that it failed and the body's closed above, and we haven't met our buy side target. Does that make sense, guys? And the things I mentioned about the balanced price range on the 5 minute, we shouldn't need to go back down here, right? Best case scenario, we shouldn't need to go back down into deeper of a discount. Steve said, isn't it better if it breaks the 4236 swing high and retraces back to fair value gap? 4236, that's here, I'm assuming. And then comes back into this fair value gap. Honestly, I'd like to see it leave that just as one more reason to go get that buy side, even though this is, and even though this is a small move. All right, how much is that? Entry would have been 422,950. So I mean, it looks smaller than it is. That's still 6-7 points, right? Stockstronaut says, on the M1, which candle do you consider the MSS? So this was going back. We've mentioned it probably a couple times over the last few reviews here and there, but ICT. So in the 2022 model, he'll teach like this swing high, or a swing high, I should say, is a market structure shift. The safe one, I think this is kind of what Steve was referring to. Steve, are you saying you wanted to see this broken to confirm the market structure shift since it's the clear swing high? Yeah, right. So that's perfectly fine. So if you waited for that to be broken, you might not have gotten entry here, but you could have got entry here. But you just have to accept that we're in higher premium, right? But I don't want to move the chart now because all this text will get messed up. I guess I can switch time frames, right? We had already swept this low, and we're displacing. The fact that we're in a hurry, right? On top of that, the inversion. This inversion failure, so we have speed to the buy side and we need delivery through the new week opening gap. That's my narrative. Buy side is my narrative. We need to go up there. Narrative trumps my 1 minute market structure shifts. Okay? The narrative, higher time frame draw on liquidity is the most important thing. More important than a fair value gap or an order block or a breaker. It's the draw on liquidity. It's inefficiencies. What's inefficient? What's not? What has been completed? What hasn't been completed, right? So market structure shifts for me, yes, this confirms can be a market structure shift. So can this little baby one. But it's really the failure of these premium arrays. If we were bearish, this should have pushed price down, right? We're displacing upwards and we had no trouble getting through this SIBI. We showed no respect of it. The bodies got above it and we kept displacing higher. So once I start seeing these premium arrays, or if you want to call it bearish PD arrays, fail, that indicates to me that we're going to reach for buy side, and that's what you would want to say the market structure shifts or change in the state of delivery, okay? And again, that will come just from experience training your eye, Steve. Like, I still do, don't get me wrong, I still do look for like the classic break a swing low or swing high, depending if you're bearish or bullish. Got you, Steve. But it's all about the speed here. So, where did I go long? I need to figure out where I went long, but I think it was in here. I believe it's right here. I'll pull up my other execution, but it was right here. But before I get into that, I want to like save this chart, right? But see how, okay, hold on. I'm going to save this chart and I'll send this to you and then I'll probably start the channel after. So if you guys want to save that or something, and again, you can mark that up. You can print it out and write other stuff you see on it. We should add the date to that, but everything makes sense. And before you guys, I'm going to go on to this trade. I longed up here, right? Yeah, it's just Command Shift S for trading view. I'll give it a second, but I'm going to go on to my entry today. So Steve, like you were saying, I didn't enter here. This is good. This is a good journal for me too, right? In live time when I was streaming, it happened fast. Now in hindsight, obviously it's clear, but I entered up here. I allowed some more price to develop and I liked how, which I guess I'll just get right into it now. Oh yeah, facts. I got to put that on, Panda. But going into, I'm going to delete some of this stuff now. Just clean up the charts. So this is how I put the narrative together for my entry, right? So all of those things that I just said, if I think that the objective to buy side is to get to and through the new week opening gap, right? Because someone answer this. If we need efficient buy side delivery through the new week opening gap, does that mean we want to see it just wick into it and then it's done? Or do we want to see it get through it to the high? Right, we want to see it get through it. We want to confirm that price is efficient. It's gotten sell side during London and now buy side during New York. Okay, so here, this retracement, I'm monitoring as soon as this, and this is, how do I say this? The thinking for this, even though it wasn't like a giant trade or anything, this type of thinking and framing narrative, understanding order flow is kind of what helped me out the most. And it just came with experience, right? So what do we have? Give me a second just to frame this. The volume imbalances are pain to draw out, but I want to make sure it's clear. So you guys see that? Again, I don't know where everyone is in their ICT journey, but This is the volume imbalance. So we close and then have that little gap. So the close of this candle to the open of that candle. That's the volume imbalance. Best case, we want to see the bodies respect, right, and not close below, which did beautifully here. So I use NASDAQ on this trade as well, which I'll show you in 1 second. But the thinking here is that I think that this is just a retracement to stop out, right? To stop out any longs that trail their stop up too tight. Why do I think that? Because the objective hasn't been complete. Using the logic from one setup for life, the London high hasn't been purged, right? And what did we know about the 950 macro? What has it done for us thus far? It's provided us the setup. So if I'm right about the objective, we shouldn't need to go back down here, right? So after this stop hunt, I'm waiting for this to fail. And this goes back to Steve, what you were saying about market structure shifts. Now, instead of again waiting, once this fails and this starts to push up, instead of waiting for this high to get broken, right here, like the classic break of a swing high, I'll make it a more prominent color. Instead of waiting for this to get broken, you can just look to see if premium or bearish PD arrays start to fail, right? To confirm that this was just a stop hunt and that price is going to want to return back to the buy model and seek buy side. Does that make sense? So we come down, sweep, the bodies respect this. Yes, I will. So sometimes it depends again. I'll look for both. If there's like a clear, like the most textbook 2022 model, I'm still watching that because half the time the swing low, say we're bearish in the 2022 model, half the time that'll become a breaker or something, right? So sometimes the swing lows actually become the bearish PD arrays. But here, right, if you were waiting for this swing high to get broken, instead of entering here, so as soon as this candle closed, I'm long. And what do? We also dip down right into here. You can be long in that fair value gap. My stop was a couple ticks below this inversion, all right? Because we shouldn't need to go back down there because I trust that this was just a stop hunt. If I get stopped out, then I lose. It is what it is. I'm not going to go on tilt. I've done that too many times, and I know myself. I used to revenge trade so bad, and obviously, again, here and there, I'm a human. Sometimes we fall back into bad habits, and we'll talk about the psychology stuff more at the end, but let's stick with the technicals for now. So the fact that this SIBI failed, right? We displaced, we had no problem getting through it. That confirms to me that we're going to go higher, right? Because these objectives haven't been met. If we had reached the top of the New Week opening gap and London high was purged and then this occurred, I would be much more hesitant. I probably would have just waited. I probably just wouldn't have done anything and just would have said, okay, this long is less likely because my objectives were met on the buy side. We could keep going up. It could go up another 100 points, but it's not high probable to me. And I'm not mad about that anymore. I used to get mad when I missed moves like that. But then I would think now and be like, why am I mad? I wasn't super confident in it. One more thing that I'm just remembering now that I wanted to mention, it was about immediate rebalances. And it's here somewhere, but I want to find the specific one. Oh, this is it right here. So this would have been a pyramid. I don't pyramid yet. I'm just trying to become a specialist at understanding the order flow, trusting my stop loss, setting my target, and let the trade play out, right? Because I'm sure we've all been there, and I still do it too, right? Trailing the stop too tight because you see your profit going up and then you don't want it to roll back against you. But you need to give your trade room to breathe. If you get stopped out, you just review it. If you win, you just review it and see how you could have done it better, okay? That being said, this would have been, if you missed this entry here, this would have been a good entry. So this is what I was watching with the immediate rebalance. So just like the inversion, the same logic, we want to see this fail. What do I say about immediate rebalances, which is this red line? if this was an immediate, we'll call it a bearish immediate rebalance. If it was real, what should price have done the following two candles? Someone tell me. We've talked about it a couple times before. Yes, speed to where? In this case, where should have we have gone? You're right, Steve, but no. So we should expect speed. If this was truly bearish, and I'm probably confusing you because I'm going to show why it failed. Yeah, downwards expansion. So we see this immediate rebalance, right? And right here, when I'm in this trade, I'm like, okay, these next two candles are important to me, right? If these next two candles expand down, we might want to come take out this low and dig a little bit deeper into this, which is another reason why you don't trail your stop loss super tight once you get that initial push. Because this very well could have expanded down. But what happens? The immediate rebalance, and then look, one candle, we go down. Second candle, what happens? We don't go down. We don't have downwards expansion. What's the rule after the failure of an immediate rebalance? Consolidation or reversal. So in this tiny little fractal, this tiny little sell side delivery told me that we were going to go back up, right? On top of it, we have what? And again, this might be getting confusing, but just stick with this stuff. On top of it, we're just coming right back into what? The volume imbalance. And what is this level? What's this black line? Look on the right side. Someone tell me. New week opening gap low. Yes, Sully. So we sweep this low one more time. Do the bodies respect the volume imbalance? Yes. So we're using, just like this inversion, right when I see this immediate rebalance, I'm like, okay, we're on side. I'm not, just because I'm saying we're on side doesn't mean I jam up my stop loss, because we can have something like this where we come down and sweep this low, right? So these are where the technicals, my infancy, as well as my fear of being wrong, losing profits or whatever, used to bite me in the butt, right? I would see this volume imbalance and say, yes, we expanded above. We should go get this high now. We're right up here. We should expand through it. And I should at least get partials here and then hopefully London high. But we come down one more time to sweep the swing lows, right? And price to the new week opening gap low. So I'm allowing for that. Would it have been nice for us to just expand higher? Yes, obviously. But I'm in no rush because so many times I've trailed my stop after this expanded what? From 4245 to 4250. 5 points. This doesn't scare me anymore. 5 points up and down. So if you entered here, you would have been up on one mini contract. You would have been up probably like 225. And then, you have your profit, your live profit calculator over here telling you how much you're up or down. It's going up 200. You're excited. It's going down back to 0. Right here, at one point, this up close candle with this wick, this looked like it was going to expand downwards. But you don't trail your stop loss. You just trust the trade and let it play out, right? From all the things we discussed down here. All because this little inversion failed. All because this volume imbalance and this low was swept. You guys see how it comes together? Just because this hasn't been met, our objective to the new week opening gap high, above midnight open to London high. And again, we watched it. We did an interactive study the other night with the One Setup for Life video. I'm going to keep saying it every time because there's going to be endless examples of it every single day. Swing highs and swing lows are more likely to be drawn to if they're a high of a session or a low of a session. So London high, it wasn't some random swing high. It was the high of the London session between 2 a.m. and 5 a.m., right? This is how you use time and price. So where did this all originate from, guys? We're sitting here. We're not rushing the first 30 minutes. We're not rushing to do anything. We're letting, especially on a Monday with no news, we're letting price tell us what it wants to do. We're just waiting to see if we see algorithmic signatures. If we don't, and it's too confusing, we wait. Maybe we'll see something in hindsight and learn. But where did this all originate from? The 950 macro. You guys see how it all comes together? It's cool, and I probably sound like a madman right now because I'm just rambling on, but I love this stuff, and it's just, you'll see this stuff every day, but it still amazes me. And we'll get into more of that precision, right? I am a madman. You're right, Panda. Okay. Again, another example. Why could we? Again, I would not jam my trailing stop right here, right? I would not trail it, but just internalizing order flow. This is what we want to see. Why do we want to see this low not come down further? Someone tell me based on this fair value gap. This low right here. Why would we prefer to not see it breached, or when it's being formed, why would we prefer for it to not come down further? Best case scenario here. Yeah, Sully, what Sully said, but more specifically, what's this red line that I have annotated? What's the red line? The CE. And what do I say about the CE? It helps you gauge if price is in a hurry or not in a hurry. After this low, swing low gets formed and we displace up, this is showing you that price still wants to reach for buy side. So all these are little footprints. All these are little clues, right? Just beautiful, beautiful. And this is all on a 1 minute chart, but this is a good example, again, of why you have your higher time frame PD arrays. In this case, it was the new week opening gap, low, CE, and high. One thing I actually wanted to mention now, it was a little more clear on NASDAQ. Let me do something like this. Nice, she's already pulled up for me. But I was really using NASDAQ as last final confirmation now. It's the only thing about these dual charts, pain to go back in, but it'll be worth it. So all those things I just explained, but I was also watching this. Same logic here. Equal lows. Just tick the below. But where do you come into? This order block. Right? See that? Same thing, confirmation. NASDAQ did the same exact thing. Right when we closed above this, and see how this was a little more closer once we closed. This candle wasn't too far away. I enter there. You could set a limit for the retracement. This time you didn't get it, but this failing too is confirmation. So sometimes if we have like two SIBIs like this, I'll wait for both of them to close above just to confirm that they both want to go up there, okay? But good rejection off that order block there to go higher. Okay, I hope you guys are learning. Or I'm not confusing you, I hope. And again, ask any questions anytime. So let me clean up this chart a bit, and then we'll look at the PM session. But today was a really good example of 950 macro, time and price, and how we can use these inversions as market structure shifts. But again, it's all context. If you see one like inversion fail, that doesn't mean it's a market structure shift automatically. It has to have context around it. It was the fact that we didn't. Yeah. It was the fact that we hadn't reached this buy side objective. Let me go up to, we don't need any of these things. And again, I haven't looked at PM session that much, so I'm looking for my eraser tool on blind. Here we go. London high was swept. Exactly, Wacky. But you keep doing things like this every day, it's going to seem tedious, but you have to just want it, bro. And it's going to train your eye, and you're going to see it more and more. Now, if you want to see some precision, watch this. Watch this random selling pressure. My fault. What happens with this high here? High of day. The exact high of day is what? Yeah, I'm joking about selling pressure, by the way, guys, too. I'm just joking if you're new. It's the algorithm precision. It looks like it's off, but you can see that's not. So up here where it says the values, the high of this candle is 4280.75. And as you can see on the right, this is the CE of the 4-hour SIBI. Same exact 4280.75. Now, if you want to see something cooler, and we'll do a whole other deep dive into this in another discussion. High to low, dealing range, standard deviation, projections. What's this number? 4280.75. That's the -2 standard deviation using this swing high, this swing low. The last swing high and the last swing low before the move up. Is that exactly the number as the 4-hour SIBI and the high of the day? Probably random. So what do? We don't just short off that 4-hour time frame, or excuse me, we're off that PD array. We don't just, it's not a supply zone. We don't just go short there. I don't do that. Some people might, they might be successful, but I don't do that. It could have very well just kept going. We were bullish the entire day. That's sick, Panda. But what do we see? Did we have reaction off this? Yes. Did we displace away from it? Yes. Does it make sense that we would see a retracement? Who was profitable all day before the sell? The longs, right? Yeah, buyers, right, Wacky? What's this? 1, 2, 3 equal lows. Failure to come right below it. More engineered sell-side liquidity, excuse me. Okay. Now, let's see how we could have entered. We could enter, obviously, here. This SIBI. Now, these ones are going to be tougher. These quick runs up and then the quick sells, catching the top like this, it is going to be more difficult, right? But we are getting displacement off of this level to the tick. If you didn't short this, we could see where we could have shorted. This failed. This was the inversion. Okay, so again, I don't know why the fibs do this, but as you can see, the high of this candle, 427.450. And as you can see on the right, the CE of this inversion, this gray box, is the same exact to the tick. So is that not what we're taught to do? Or what we're taught to require, what we want to see if we're short in this case? We want to see it respect the CE. It goes to the tick, then displaces away. Right? Yeah, Panda, isn't that sick? Dope. Right, so we could have shorted on this retracement to the inversion, right? Because these lows were still intact. They still weren't taken. Again, this would have been, okay, so this would be probably the trade that I would have taken. Again, I wasn't here for afternoon, but this is why we review, and this is how we act to train our subconscious, to train our eyes to see these things. to actually frame a trade, right? We have this inversion. Do we take this low? No. Since we didn't take this low, I want to monitor how we act around this inversion. Obviously, I'm not going to mark it, but we have this little SIBI here, this mini SIBI here that we didn't get to this time, and this SIBI here. So again, if you don't want to just blindly short this, you can see how we act on it, and then if we displace away, you can look for shorts, right? So this is how you can do something like inversion to inversion. This was our level. After delivering off the higher time frame PD array, back to a premium, we left those lows, right? After we get back below this and it respects the CE, we can look for something like this. We can look for this fair value gap to fail. We close below it, retrace, sell off, right to our target. Wow, this is actually beautiful. I haven't looked at it till now. You guys get that? So instead of just doing something like this on a retracement, and your stop loss is all the way up there, right? You wait to see the reaction. You wait to see if it respects this, because this very well could have just kept going higher, right? It's trading. This is the risk. But you close, or reduce, I should say, your risk substantially. I'd rather just wait to see the reaction, make it boring trading, be patient. You know, we have usually on these runs up to premium PD arrays, which I've mentioned before, we'll see BISIs formed, and we would want to see them fail and become inversions. So I would just wait, see this, close below, retracement, I'm short. And then for this case, my stop probably would have been realistically a couple ticks above this or a close above this to give it a little bit of breathing room, just in case I wanted to wick above this one more time. Okay. Yes, sir. Blank. A+ student. Right. Yeah. It reduces the risk. Right. And that makes trading the silver bullet or the 2022 model that much less scary. Right. Especially on deep retracements like this. Right. Because it's hard to just short. When you see these two big bullish candles here, it's hard to press the sell button there, right? That's essentially calling a top. In this fractal, that's calling a top. And you're going to have to press the sell button at some point, obviously. But I'd wait to see the reaction. Once we react and this fails, that's, Steve, what we were talking about earlier, and everyone else, obviously. But this is the quote-unquote market structure shift, or in other words, just confirming that we're going to reach for sell side. Exactly, Brian. Right? Does that make sense? How you can reduce risk? How you can wait? Awesome. It would have been a different story for me, right? We still could have monitored this reaction, and we still could have very well kept going lower, but it was the fact that we left these lows intact. We came down so close, retraced up, sold off. Okay? You guys following along so far? But see how this is all, we're framed like it's all from the New York Open. It's all from the beginning of the day. All from that sweep of the weekly liquidity sell side. That's where we started this. Right? And Pandice, you see your message was by COTE, and it reminds me. Yeah. So I'm sure you guys, again, if any of these concepts or me explaining all these things are confusing you, one, it'll take time to train your eye, but you're just trying to find the PD array that works for you, right? What makes the most sense to you, and then you can expand your model. Some people, let me reverse this and make the lines brighter, just so. I've mentioned this a few times now, but what do we always say? Draw on liquidity, higher time frame narrative is the most important thing. Some people have so much experience with just understanding liquidity, and they're experts at understanding liquidity and time, that all they need is this fib. Do you understand? This is the OTE area right here. They don't need to do all of the inversion analysis. I prefer the inversion analysis. This is Confluence. The inversion stuff, all this PD arrays failing, helped me. But some traders, they're just using OTE because they understand we've already had all the buy side swept. And they understand there's going to be a retracement to sell side, right? All the buyers who are profitable from the AM. All they need is a fib, right? Because they understand liquidity and time. So again, just keep showing up. There will be something or a group of PD arrays or something like that that you guys will gravitate towards and make sense. The inversion really helped me out, but doing these reviews, doing these journalings, showing up every day, it's going to train your eye. It's going to understand what you want to see fail, what you should expect to fail. And when you expect things to fail, you're more ready to enter, right? You don't have to think about it and do it on a whim, do it impulsively. And then once you're in, you're not going to be able to make logical decisions. You're going to be emotional because you're thinking, did I enter early? Am I right? Am I wrong? Oh my God, I did it again. I'm going to be wrong again, right? All those thoughts start coming to mind, and I've been there, and those thoughts still come to mind. Like I said, we're human, but you keep training your eyes and you're more confident. Brian said, did I see how NQ rated liquidity in ETH and RTH rated open on the daily lows for NQ? My eyes are wide open right now. Yeah, that's good what Panda said too. Yeah, you need to be, what's up, real OG shit. And Wallakine, sorry if I'm mispronouncing that, but what Panda says is important too. It's also what ICT says. You could watch all of ICT's videos, like ICT Netflix, and take the notes. But if you're not genuinely, actively going into your charts and looking for these things and doing these reviews by yourself, you're not going to get the most out of it. Cool. So I'll go back to see what Brian says, but any questions about this PM? But even this inversion, let's just see how much this would have offered here. It was what? The failure of this one. Entry would have been 427,175. Target was 426,175. Exactly 10 points. If your stop was above this inversion, would have been about 4 points risk. Or you could have done lower. You could have just done above this high as well. That's preference, but cool, guys. Nice blink. I hope this helped you guys. I'm not done yet on the calls, but I hope so far the order flow helped you guys and see how we can literally walk through these candles on a 1 minute chart, right? See, I actually want to see how far we dug down. Yeah, we got back below and now we're just chopping around. Is this a random zone we're chopping around in? No, it's the new week opening gap, which we expect price to act as a magnet for. All right, so let's go back and I'm going to delete these things. And I'm going to go to NASDAQ and look at what Brian said. I posted this in One Setup for Life this morning before these things happen. This is the logic. This high gets taken because it's a session high. Expansion through London high, what's going to get taken? The next session high. Friday's lunch high, right? We didn't get previous day high, but these are good moves, right? That's the logic. But great here, off this breaker. Low, high, lower, low. Right here, boom, breaker, immediate rebalance. This is the example of the immediate rebalance working. Take off, okay? Okay, let's go to regular trading hours and see what my man's Brian's talking about. BZ. Delete this stuff. Okay. Let me reread your message. Yes, Brian. Okay, let me go scroll up to your message. Did I see how NASDAQ rated liquidity in electronic trading hours, then regular trading hours, right at open on the daily lows for NASDAQ? Yes, we had this. I think this is what you're talking about. So this was the regular trading hours sweep. right? But then we had this. Is this what you're talking about? How we had both of those sweeps? Scroll down to your message. Yeah, yeah, yeah. Yeah, we peeped those. I'm sure Brian's about to explain what RTH and ETH is to Wacky. I'll let him do it. Oh, maybe not. So regular trading hours. If you look in the bottom right here, that's how you toggle it on or off. It just has no overnight data. So futures, they trade overnight, 23 hours a day. But as you can see, this is Friday's 16. I have the military time. It's just 4 p.m. Always New York time. And then this is Monday open. So there's no overnight data. And then electronic trading hours is all of the data, right? So see how you can see these lows? Does that make sense, Wacky? I need to go through and look at everything CNJ. I haven't gone top down on plan going forward, but yeah, and the stuff Brian is talking about is discussed in the One Setup for Life video by ICT. Again, watch it, even if you watched it once. I think it was Wacky who said he's gonna watch it like 40 times. Maybe it wasn't, but I think it was. Wacky doesn't sleep. All right, let's go 7 times. Peace, dude. All right, if anyone has any more questions about today's session, but I think today was a great example of how all of it kind of comes together. And again, it could seem overwhelming, but with experience and showing up every day and doing these reviews, you're going to train your eyes and you're going to expect these things more. And when you're doing your journaling, you're going to see them quicker. Okay, let's look at some charts now. We'll do ES, NASDAQ, and we will do dollar. Dollar's my arch nemesis right now. Last week was so annoying. It just stuck in the same range. But that being said, we can still, as long as dollar's consolidating, like we can still get our setups in NASDAQ and ES. That's why I don't require like a great setup on dollar. It is extra confluence if we get an inverse setup. So if we're bullish on indices and we get a sick bearish setup at the same time on dollar, that'll increase probabilities as well. But dollar can consolidate and we can still get good moves on indices as long as they're not going in the same direction, because then I would just be waiting to see which one was quote unquote lying, right? Because they're not supposed to be going the same direction. But let's go weekly down ES, weekly down NAS, weekly down dollar real quick, and see what we got. Expansion, sell side is 4194. These are just the clear liquidity pools, right? Just chart those out. Daily. Okay, so now headed into today, we had this inefficiency. Now we have this to monitor as well. We have this breaker, right? High, low, higher high. So the lowest down close candle is the breaker. All right. I'll be using, if we continue, let me change this to 50%. If we continue upwards tomorrow, we could monitor the mean threshold, so the midpoint of this breaker, but I'll mostly be using the SIBIs, right? Because if we reach up to here, I would kind of prefer to just see it come into here if we were going to go down lower. We could blast through both of them. We have to see, but I'll be watching these daily SIBIs. 4 hour. Okay, as you can see, this was the 4 hour SIBI we beautifully tapped into. We're back in this. I guess we can monitor it. It's not make or break for me, this since we closed above it, it would be an inversion, but it's not the cleanest setup in terms of inversions that I want to see. But it could work, so we could monitor it. But let's see what we have in the hourly and stuff. You can see too, obviously, we're finding the daily civvies. We have this 4-hour inefficiency, the CE right above with this buy side. And this buy side, as we'll see, is last Friday's London high. Facts, Brian. Brian, that change, just like understanding that and being okay with missing moves, changed the way I trade. I demand my setup now. If it's not extremely clear to me and I missed a move, it's still a win for me because I didn't break my rules. I didn't do dumb shit, right? Even if I had made money, it's not the right way to do it, at least for me, right? I want to be patient. I want to be a sniper. I want to enter high probability trades because I've seen these high probability setups. And when they appear, it's like magic, right? You still have to execute and it's still scary. But once you see the trades actually play out a couple times, once you get those first few times under your belt where you're like, okay, I think the stop loss is safe and I think it's going to reverse and go to this liquidity pool. Once you actually sit through that discomfort of watching your P&L fluctuate and let it go to your target just one time, it's going to feel so good. And right away, the first time that happened to me was like a 25-point move, right? And my biggest fault was jamming my stop loss too tight. And then it would always stop me out and then go to my target. But once I have that first one under my belt, something strange happens where you're like, once it hits your target, it's greed now. You're like, whoa, I know I can do this now. I know I can hold to my target. Shouldn't I just keep holding? So it's a balancing act because you don't want to trail your stop too tight, but you can't get too greedy, right? But once you get those first few under your belt, if you're having trouble being impatient or not letting your trades play out, right? Just get it under your belt, sit there in the discomfort. Except before you enter a trade, before the New York session even opens, I always say, I'm going to be in a trade today and it's probably going to be a little uncomfortable. I'm going to sit there and deal with it. It'll make me a better trader. It'll make it less uncomfortable next time, right? Or I say, nobody in the world is forcing me to trade today. Who's sitting here? I don't have a boss here that's telling me to trade, right? You're waiting. That's the luxury of it. You're waiting for highly selective or probable, I'm highly selective, but you're waiting for highly probable setups, right? On top of that, I guess now we'll just segue into the psychological stuff real quick, but that's why I have my one loss per session rule, right? Because I would take losses and I would get pissed and I would 5 minutes later somehow it was like you're in a trance. Somehow you're just in another trade. And I'm sure some of you guys have been there, right? You were so sure you were waiting for that PDRA to get hit and then get short. And then you finally get the perfect setup and it looks so good and then you get stopped. And now you're like, no, there's no way it goes higher. And then you get stopped again. You try one more time. All of a sudden, your initial loss from your first trade is triple or quadruple because you sized up the next trade to try to make it all back and more, right? That's why I have the one loss per trade session. And what Brian said, you can leave your room after a loss, or if you're in a trade or something, just close your laptop, shut down TradingView, right? On top of this, if you do have, say it's the AM session, say this morning I took a loss. No, there's no one saying that I have to make it back today. Who says that you have to get your losses back today? Who says you have to get your losses back this week? I could wait for I could have a loss today, tomorrow, Wednesday. If I follow my risk, right, and my stop losses, aren't giant risk, I'm not over leveraging, I could have no trades after 3 losses in a row for 2 weeks and make it all back tenfold with one high probable setup. Do you understand? There's no need to rushing it. If you just keep showing up and putting the work in, you're going to see how precise these concepts are. And you're going to get more confident in your ability to read price action. That's why you do the reviews. And you're not going to feel a need to take a low probability setup, right? Because I don't know how else to put it. You're going to say, I'm better than this. Why would I take this low probability setup when it's not that clear to me? Yeah, it could go to my target, but I want to be sure of it next time, right? These are some of the things that I think of that help me out with not overtrading, especially after a loss. How you respond, and when I say you, all these times, if I remember talking about this stuff and I say you, I'm basically saying me from my personal experience. How I respond to a loss is so important, right? You have to just say, you've probably heard ICT say it, it's a business expense. I got it wrong. It is what it is. Does that mean the model's broken? No. Does that mean I'm an idiot? No. Does that mean I'm never going to make it as a trader? No. Right? It's one loss. It's going to happen. But if you mentally prepare yourself and accept the fact that every time you put on risk, it's a real possibility that it could be a loss. So just wait till you have a clear validation point. Something's clear for you, right? Again, I always say preference in terms of amount of points for risk. It's just what you feel comfortable with. You can have a tight stop loss, but you have to accept the fact that it might get stopped out more often than not. So I usually do 4 points as a max. I try to stay with 3.5, 3 points, but 4 is absolute max. Right? If I can't find a clear stop loss, 4 is absolute max. But beyond that, I'm not comfortable. And that's an example of me bringing my preference into it. ICT, at first, he says if you're just starting, do a 5-handle stop loss and a 5-handle profit target. 1-to-1 ratio, but 5 handles is too much, right? Yeah, 5 points. So me personally, I'd still want to target the 5, but I just use a 3.5 point stop loss, right? Because I don't want to open myself up to 5 points of risk. But yeah, little tangent there, but it's important. Self-control, building your rules, respecting your rules, is a big part of it. And you have to make these, or excuse me, respect these rules when they happen, right? If you break the rules, make something like, okay, I can't trade for the next session. I can't trade for the rest of the day. I can only paper trade tomorrow, something like that, right? Really think about these things because anyone can learn the concepts, but really think about these things that make you go on tilt. The most random things, right? If you get in a fight with your girlfriend or you're pissed about something or you're sick or you slept like shit, if something's off and you don't feel fully comfortable, no one says you have to trade today. Just wait. All right, so I'm gonna continue with the top down. Sorry, that was just a little tangent. And again, that's it. It's all that being said, it's easy to say, "Oh, I'm gonna follow my rules right now when I'm charting. I'm gonna be okay with after a loss. It's okay," but I'm not saying taking away from the fact that it's like difficult after loss. It feels like shit. Losses stink. No one wants to take a loss, but they're part of the business. But you know that if you're confident and you follow your rules and you trust the process and you don't freak out and go on a tilt, your losses are going to outweigh, or excuse me, your profits are going to outweigh your losses. But all right, let's go and finish up this top down. 1 hour. I still want to use, so this was kind of gross how we came back below this, but I still want to use new week opening gap to gauge sentiment. Interesting again, we came just close to the previous day lunch high, this swing high here at 428.475, and we sold off. So this could still be a target if buying resumes. We'll have to see. I need to see more structure form for London session and how we are in the morning. You guys see this lower here? This is probably a random bounce right here off this inversion. Probably random. Okay, I'm not going to go lower than the hourly. But we came close to this buy side and didn't take it. So I want to see how this acts. Where, this, Brian? That one right here. Bro, I'm telling you, like in this review alone, in this one review, we've seen a ton of these little, see how this Brian's referring to how this low went exactly to this inversion and then we took off to our objective. We've seen the precision. So you know, like train your eye like this every day. You're going to start seeing these things live, right? And you're going to feel confident. You know that these things occur and that it's real. That these algorithmic signatures are real, right? And especially if you're just starting out, I've been to or through like the old concepts. Like I the level of precision ICT stuff is just crazy. I'll say that. So I don't go on another tangent. I'm gonna go to NAS. Give me 1 sec. I gotta switch the screen. How you guys doing? You guys liking this so far? Is this I'm just changing the screen for you guys. Dope, dope. And again, thank you guys for coming. This is good for me too. This is my review, and it's how I explain things. It forces me to learn this stuff and jam it even more into my subconscious too. So let's go to NAS. It's going to be more of the same for NASDAQ. I did mention at the start of the week, any retracements up into this weekly volume imbalance. I want to see how we act. You would want to have the 50% level there too. This is probably random. That bounce off of this 25% level of this large weekly fair value gap. And again, I've said it before, but if we have these large gaps, especially on the higher time frames, you want to have the 25, 50, and 75% level, right? I believe on the daily too. It might have been on ES, but did we get down to the C on this daily? Yeah, you guys see that? Probably random. Sell side swept. Oh wait, no, that was today actually, but still. I mean after today, but still. So ES is low. Oh wait, no, I'm tripping. I don't know what I was looking at. This was this morning. I'm sorry. But I'd be wanting to monitor retracements into here, as well as that weekly volume imbalance. So the low of this is 88750. My main level would be the 50%. If we reach the 50%, how do we act? Or if we fail to get to the 50%. Okay. Yeah, I don't know why in my head for a second, since we just looked at every time frame known to man before that for like an hour, I was looking at this like it was like a 5-minute chart for some reason. I was so confused for a second. Um, Again, similar structure to ES. We failed to get, this is last Friday's London high. As you can see in the bottom, it says 2 a.m. We failed to get to the CE, but relative equal highs right here. Those highs are way too clean. We'll see when we get down how clean they are. I'd be wanting to see this offer support if we're going to go higher, this inversion. Again, when I say stuff like that, that doesn't mean I just enter long there. It means I use all the logic and all the tools, like if we reach the CE, yeah, thanks, Brian, my lawyer. It means I want to see how we act around there. I want to see if we get my model around there at the right time. All these things have to be pieces of the puzzle at the right time in the right scenario, right? We have respected this thus far. Same thinking if we get above this. I want to see how we act. Hourly. This was that random inversion today. I'm joking. Let's see what Blink is referring to. That top 4-hour fair value gap can be used as a high time for PRA, even if it's been used for. Yeah, so I'm specifically, this one you're referring to, I believe. I'm specifically monitoring if we get to the CE above this buy side. Yeah, I have a whole thing on the videos. I typed it all out the other day. It was a pain in the ass. Thanks though, boys. Appreciate that. But yeah, so We could reject off the low of this, obviously, but I more want to see, since these highs we'll see on the lower time frame, they're so clean. It's the ones from last Friday on the live we wanted to see swept before our short, which would have smacked, but it did not, and that's okay. But if we sweep these highs, and what happens if we hit the CE? Yeah, so the highs, and then do we respect the CE, or do we fail to reach to the high and then displace lower? Okay. Okay, so NASDAQ is above its new week opening gap still. So we can still monitor this inversion, right? I would be curious, and I think, was it stocks or not, talking about if we were just going to sweep before going higher? I believe it was. Apologize if it wasn't. But I'd be curious to see if we sweep this low, which is in terms of the one setup for life. Oh, it might have been CNJ. Yeah. My bad, CNJ. Yeah. So one setup for life, what would this be? This would be a session low. It's the previous day PM session low. Okay. So if we are going to reach for, this is what I was referring to last Friday's clear highs, right? As well as today now. If we do sweep this, we'd want to see something like this, and then we'd be looking for a setup off new week opening gap. Best case scenario, we stay above the CE and then displace higher. Okay. Again, we have to see where we are in the morning. And I don't trade London. I only trade New York because I'm sleeping at London. Okay. I want to see us get above this inversion. I want to see us get above that for continued buy side. Okay. But yeah, CNG, good thinking there. I'm going to switch to dollar. Let me pull it up and then I'll switch the screen for you guys. Dollar. What have you been up to, my friends? My old friend Dixie. Okay. Share screen. Dollar. Live. Okay, so looks like we got some selling today. I know we got last week's low. That's the only thing I checked during the live. Okay, so this, we mentioned this, I think, in the review last night, and we have been. So remember I said I would have felt so much safer on bullish continuation in dollar. But the fact that we came so low during this week of October 9th, the fact that we came so close to this and made the swing low but didn't price this inefficiency was suspect. Do you guys get that? So now I want to see how I don't know if we've priced to it yet. Let's see, 105,517 is the high of that inefficiency. The low is exactly that number, 105,517. So for this week, best case, I'd want to see the bodies stay inside of this. We can wick below it, but I want to see the body stay inside of it. This is actually interesting. But that's why I felt a little suspect that we would go higher in terms of speed, because if we did, or we're going to go higher with speed, we shouldn't have spent this much time, inside of the daily for value gap here. So now I want to monitor any retracements up into here. So how does this aid our narrative with ES and NASDAQ? If we retrace up into this BISI and it serves as an inversion, and on lower time frames we get displacement away, and we're seeing what we want to see in terms of a long setup form on indices, that's how I would use dollar, right, to aid a narrative. A continuation through this low, we could target maybe this daily low, but more importantly, I want to see how we acted the weekly. I know it's small, but on a closing basis. Again, look at this beautiful rejection off of this CE of the wick. And then one more time right there. Just gorgeous. But if we're going to go higher, we shouldn't have spent so much time in here. Usually you'll know, say this was a 1 minute chart. Usually you'll know right away. It'll take your stuff, or excuse me, take your entry and then boom, displace higher. Okay. Right. So now, since this low is taken, we could still at some point, I'm sure we probably will at some point go back up, but since this low is taken, I want to focus more on the daily and weekly levels that I just discussed. And now, since price action on dollar hasn't been, in my opinion, super clear, super favorable in terms of the range, I don't really want to mark up all these things because it's just going to be analysis paralysis. My main thing for dollar is this zone right here, okay? But we do have this large 4 hour. You can monitor that as well as just this. This would be here. But we did just take out this clear swing low. Just by a tick, I'd want to see more of a deeper stop hunt, right? Because stop hunts aren't just ticks usually, they're deep for like reversals, for higher time frame reversals and stuff like that. Okay. Yeah, so good sell today in dollar, which made sense for the bullish run. And then we started consolidating at 2. All right.